Now I want to walk you through a sample balance sheet in my business plan. So for assets, you got the fixed assets and other assets, and basically my current assets are cash that I have in the bank and people who owe me, clients who owe me money, like coaching clients, right? That's the assets. My fixed assets are things I own, so it's basically little things the company owns, maybe intellectual property like a trademark, office supplies, computers, things like that. So a total 55,000 and a half. And then for liabilities, basically the only liability that I have for this kind of a business, this is an easy business, right? There's not a whole lot of moving parts when it comes to these things, and it's just outsourcing that I owe a bill, right? And again, it's not even a real bill. I just made it up for the example's sake. And then I count up my equity, which is basically my assets minus my liability, and I get my equity, right? So you just basically, the idea here is just that you count up all the things you own, all the things you owe, and subtract one from the other, right? Very simple, very basic. Just make a list for one, list for the other, subtract one from the other, and there you go. You'll have basically your equity counted up. So even though a balance sheet is, for a big company, a balance sheet can be really complicated. Like if you're like a publicly traded company, your balance sheet, I mean, it takes a real accountant to read through it. It's really difficult to understand. But if you're just planning a business, if it's small, it's really easy. You really probably only have a few lines in each spot, and it makes things really simple for you. And so this daunting balance sheet term really doesn't have to be that difficult.